Calling for on-chain markets. What exactly are you calling for there? Do you want all securities to be tokenized?
Perhaps. I mean, when you look at the whole arc of history, in the 1960s, things were still in paper form, paper securities, and there was so much trading in this big bull market at the end of the 1960s that the New York Stock Exchange and other exchanges had to close for one day a week just to catch up on the paperwork, and because the data processing couldn't accommodate things. And then sometimes 2 days a week because the volume was so heavy. And it's not that they had quill pens to write in the ledger to show the transfer of stocks, but they had to build the systems to accommodate all that. The SEC at the time helped the industry through helping them change the rules so that they could immobilize securities, have book entry. The Depository Trust and Trading Corporation came about, which is a cooperative of securities firms to try to do that book entry transfer of stocks. So that was a huge watershed. So I think we are perhaps at the similar point now where who knows how this technology will develop. I certainly don't have a crystal ball. 5 years from now, it could be completely different. So we want to be in a good place. We're accommodating that. We're not an impediment to innovation.
Under the last administration, the Howey test was used to administer whether a crypto asset was a security or not. And it was deemed that most crypto assets were considered securities. I know you are of the opposite school of thought, that many crypto assets are not considered securities. Is the Howey test germane in your view at this point? Is it applicable, or is the SEC looking at creating a brand new yardstick to create a clearer definition for what defines a security or not?
Well, great question. The Howey test is named after a Supreme Court case back 80 years ago. It had to do with orange groves and oranges. So that's completely different than tokenized securities or tokenized assets. And so what we have to do is, there's a Supreme Court ruling, so that's the law of the land. It interpreted the term investment contract, which is in the securities laws, but Congress in those laws didn't define that. So thus, the Supreme Court took a stab at it that worked for that one particular case and has been applied for years after. So now we're now in the 21st century, and dealing with digital assets. So the SEC has authority to interpret that term, and so we are going to set out to have rules that comply with the law and obviously build upon that, and to help people understand how that applies to the current situation.
You said in a speech yesterday that in the coming months, the SEC will consider using authorities to make sure that any archaic laws that are squelching innovation and entrepreneurship are revoked. What could we see stripped away?
Well, that's a good question. I don't want to prejudge anything, so we're going to have to do this in a very straightforward and diligent manner, obviously. But there are a lot of things that apply to, say, operating companies like a steel company or something like that that's manufacturing steel, that doesn't apply to maybe a digital-oriented company. And so as far as the products go and whether or not those particular products themselves need to be registered as securities or not. So again, we need to make sure that the forms that people need to fill out in order to declare and publicize to the SEC and to the public what their product is, what it's supposed to do, what the innovation is, or what the purpose is, so that our rules can accommodate those particular aspects of these new products.